Welcome back. You're watching Trading Day, and well, the stock of RBL has been in focus today after the bank announced that they have approved raising 1,680 crore via shares on the preferential basis, which will be issued at a price of 515 per share, which is at a discount to current market price of almost 525. Well, the purpose of capital raising is to augment tier 1 capital and also to support the future organic growth of the business. Let's go across to the management and find out what they are going to do with this money. We're joined by Vishwavir Ahuja, who's the MD and CEO at RBL Bank. Mr. Ahuja, good afternoon to you and appreciate you joining us today on BTVi. Could you tell us what is the reason for the fundraising?
Yes. So the total issuance is 1,680 crores to be precise, spread over 6, large investors, all highly marquee and pedigreed. So leading is CDC Group of UK, then there is Multiples, then there is HDFC Life, then there is the Munjal Family Office, then there is Stedview Capital and ICICI Lombard. These are the 6. If you see the list of vehicles that we have put out, some of the vehicles belong to these institutional investors. So essentially there are 6 investors, through the 10 vehicles that we have put out in our list.
Okay, so there will be 6 investors, but tell us, Mr. Ahuja, would you be looking at any more fundraising in the next 2 to 3 years?
Yeah, these funds are fairly substantial, and they should see us through for at least 2 years. That's the way we are looking at this, and we are very happy that such great investors are reposing faith in the bank. At this stage, we know where we are going, and there are lot of opportunities that we see in the market.
And are there any acquisition plans?
Sure. I mean, the first thing to note is that, as you yourself just asked me, that we are consuming capital at a fairly rapid rate. So we are consuming more than 60 basis points of capital every quarter. That means almost 2.5% every year. So that itself is a huge, if I may say, requirement of the bank. And so essentially, with the organic growth momentum being so satisfactory, most of the capital is required for that essentially. Then we will see as we go along. There is nothing specific on the table. We just want to keep the flexibility to look at other opportunities as they come up.
So nothing specific right now, but you're open to looking at opportunities. Just want to understand here, Mr. Ahuja, will acquisitions help in geographical expansion or any kind of segmental expansion for the bank?
Again, I'll say it this way, that you will see in our entire asset portfolio, there is a very good balance between several businesses. Yeah, we operate in all segments, starting from large corporates to mid corporates, SME, agri, rural, financial inclusion, retail lending. So all of them are, in our mix of businesses. And we are growing in all segments. I've said this before, I'm saying this again, that fortunately all segments are growing and growing quite nicely. There can always be a little bit of hiccups here and there in terms of, certain components of the broader economic environment, but that has in no way impacting our strategy to grow across segments. So therefore, we really have to see it in that perspective. It has the opportunities for organic growth are for us quite sufficient. However, at the same time, like I said earlier, if something interesting comes up in any of the various spaces, we'll see how to deal with that.
Okay, so we've discussed about organic growth, but also tell us, since you've mentioned that a large part of the money will be used for general purposes, is there any timeline that you would like to share with us for any kind of possible inorganic growth?
No, we are not thinking of anything like that. If you trace our history, we have reached capital adequacy levels of 27 and 30% also in the past. Okay, our philosophy has been that this is a fast-growing bank and therefore capital is always required. And when there are great investors willing to repose faith in you and support you, then, there is no reason why we should not, accept that gracefully.
Okay, but let's discuss about the asset quality then. Could you tell us about the divergence in numbers between the annual report and reported numbers as far as GNPAs and net NPAs are concerned?
Oh, absolutely. Absolutely. The first and foremost point to be made is this is nothing new. Yeah. We were perhaps one of the unique banks to, in our last quarterly, if I may say, announcement on May 2nd, yeah, we had put this up in our presentation, and it was also on our website as far back as then. Yeah. There is nothing new that has come out in the annual report. We were the bank which actually reported it, immediately as our quarterly results were announced, as our annual results were announced. That's the first point. The second point to be made is that we had then very clearly said that this is the level of divergence, and also it related to 5 accounts, and that 4 of the accounts had already been previously recovered. Yeah, as of March 17, they had been previously recovered, and therefore there was only one remaining account, and I talked about that even in my commentary at that time quite clearly. Yeah, so to me this has been, I don't know how it has come.
Okay, well, we are aware that you will be declaring your first quarter numbers in the next 2 weeks, but tell us, how does asset quality look so far in FY18?
So again, this comment I should not make today. All I can say is that yes, asset quality continues to be, satisfactory. But as you will appreciate that in less than 2 weeks or so, we will be coming out with our quarterly result announcement. So, I cannot make any more specific comments at that stage.
All right, we'll wait for the numbers to come by. But before I let you go, I'm going to touch upon that topic of acquisition once again. Are you in talks with any interested parties for any kind of possible acquisition?
We are not. In fact, there's a board meeting going on right now, and the agenda was essentially around the capital raising.
All right, Mr. Ahuja, appreciate you joining us today and giving us all those details. Well, the earnings will be out in the next 2 weeks, and there is no any kind of divergence between the NPAs or the GNPAs which have been reported in the annual report or which were reported by the company earlier. Let's revisit the markets, which are just about trading.